Good morning, everybody. It's the 29th of April. We are Signal Centre Talking Ball. I'm Joe, joined by Stevie and Jamie. Stevie and
Nice.
Jamie.
I like Stevie.
Stevie O'Hare. Welcome to the last trading day of the month, gentlemen, and of the week as well. More importantly, we made it.
Hey.
Congratulations.
Yeah, we got through.
We did. And unless you're one of those mad people that trade 24/7 on cryptocurrencies, then sadly, you got another couple of days to go
to endure.
and then
Eat,
it
sleep,
doesn't stop.
repeat. No.
Yes. Okay. So welcome everybody. Let's get stuck into the latest news that's impacted markets over the last 24 hours. So headlines up on the screen right now. Ukraine fears remain in focus. There were further concerns over the Ukraine situation and risk of further escalation, especially given the aggressive rhetoric from Russian officials. President Biden requested an additional $33 billion in military and humanitarian support from Congress. The Russian missile strike on Kyiv, while UN Secretary General Guterres was in the city, further inflamed tensions. Yesterday, we saw the US GDP number disappoint. According to the advanced reading, US GDP data contracted at an annualized contraction of 1.4% for the first quarter of 2022, after 6.9% growth in the previous quarter, which was well below the consensus forecasts of 1.1. Wall Street did surge on yesterday's session, posting strong gains on Thursday, with significant element of short covering being attributed for the move higher. The US gains triggered wider improvement in global risk appetite, and that was despite underlying reservations elsewhere. The dollar corrected from a 20-year high. We saw a little bit of a reversal yesterday, but all in all, it was still pretty stable and still remains up close to those 20-year highs. In Germany, we saw the inflation number hit a 48-year high, which is obviously massive. That increased to 7.4%. The euro, on the back of the dollar correcting slightly, recovered from a fresh 5-year low, but again, still remains under pressure, which we'll come on to shortly on the charts. There was a little bit of sterling relief as well. There was a small rebound on sterling dollar, but not enough to give us a win on the gun to the head trade, sadly, on that one. And finally, there was a U-turn from the Swedish central bank Riksbank. They actually increased rates to 0.25%, contrary to expectations that policy would be kept on hold. So that's it for the major headlines. We're going to get now involved in some charts and have a look at some price action over the last 24 hours. And Steve, you're going to kick us off, hopefully, with a look at either cryptocurrencies or commodities.
Yeah, I'm going to share my screen now and dive into, you guessed it, cryptos.
Cool.
The weekly chart looks quite interesting. We've been talking about it for a while, this head and shoulders formation, which I keep banging on about. And we've got this channel as well on the weekly chart. This you can see it in orange, and it may be better to look at it on the daily chart, actually. It's a little bit less. It's a little bit more obvious. And we're talking about this bearish flag. Now, price action has stalled on the downside. It was approaching the bottom of this flag, and it has stalled. We've had a couple of days of positive price action. We've still got resistance coming in at 40,780, and above that we've got just under 43,000 as the next resistance. So there are two levels to watch over the weekend when I'll be relax and enjoy myself, and all you Bitcoin traders can really consider this. So it does look a little bit of like a bottom pattern forming on the short-term basis, but overall still pretty negative towards Bitcoin. But yeah, nothing to sort of like really to add to that. We've retraced quite nicely. This retracement has gone through the 61.8, decent volume, as we can see at 4 o'clock yesterday, which led to a spike higher. But obviously cryptocurrencies are very sort of one-sided, very long end driven, so not like normal markets, normal traders. Stop being mean, Joe. So
Say
let's
it,
look
you
at
did.
Let's look at oil. Oil had a nice turnaround yesterday as well. We've found decent support in the WTI crude oil at 92.66. This week we've stalled in front of there. We still got down to $95 and reversed very sharply, forming a bit of a bullish hammer candle. However, on the MACD we are still the momentum is still stalling, so there is a little bit of bearish divergence going on. Actually, we can't really say it's bearish divergent on the weekly chart, because the sort of like we have got this, we're in the middle of a correction and the momentum is stalling. So I'll take that one back just to allow oil to recover a bit more. We've got a potential for a double bottom formation. That needs a break above $115, but you can see on the 3 days ago we got Monday, the bearish day. We had the turnaround Tuesday and a bit of indecision Wednesday, but we've continued to follow through to the upside. Let's get rid of these lines. And further upside we've seen today. So we've back up to where we saw last Thursday's high, and potential for to kick on a little bit further as well. If we look at the 4-hour chart, we've got the shape of a nice inverse head and shoulders formation. Although it's not at the bottom of the trend, you still get the same sort of price action. Played out really nicely there. Potential for the measured move on here will be pretty decent as well. Measuring that to there and that to there. Looking at targeting 110 on this inverse head and shoulders formation, or at least around about the resistance around about 109. For me, that looks pretty good. And also, I'll cover off oil, which has had a decent rally. We've got this head and shoulders formation looking to target a serious move lower, and we've got a break through the neckline. It's a bit of a we've got like this double right shoulder here, so it's definitely not a straightforward head and shoulders formation, but potential for a little kick up towards a retest of that neckline. This is an upward sloping neckline. We could even sort of like take a look at this. That potentially could be a better sort of version of the head and shoulders formation. And yeah, we're retesting that break, and resistance coming in at 1915. A break above there, look to target 1930. But if it doesn't break above there and holds and reverses lower, then really looking for this 1872, 1873 level to provide a guidance. A break down through there, and I think this head and shoulders formation should be considered more serious. That's me.
Thank you, Steve. Quality roundup there for the end of the week. Let's have a look at FX then. So dollar index yesterday, talked about there being a bit of a correction. If you look at the chart on the daily basis, doesn't look like much of a correction at all. So we actually posted a really strong candle at the close. Maybe we're having a bit of a correction now, edging quite close, I suppose, to engulfing all of yesterday's gains, but there's a long way to go on the session, so I'm not going to get too sort of carried away with that idea just yet, although it is the last trading day of the month, so maybe there will be some position adjustment, maybe some profit taking in this, or some squaring off of the books. But this level here, 103.82, which we can see acted as a resistance level yesterday, we have to scroll some way back on the chart to the left hand side to find why that level is relevant, and we can see it there. From the 3rd of January 2017 was the last time it was at that level, so that's proving to be some resistance, just as this level was previously, which was the highs that we posted around the height of the pandemic. Above that, we have a 261 Fibonacci extension level, which comes in at 104.52, and that was actually from the double bottom pattern that we had drawn on the charts here, which completed back in September 21. So maybe that will act as resistance as well in the very short term, but no denying overall it looks pretty bullish, and can't really see any potential signs of any massive reversals occurring on that anytime soon. So that clearly is going to have a knock-on effect on anything else linked to the US dollar. This is sterling versus the dollar. I was hopeful of this 61.8% Fibonacci retracement level doing a job, but it didn't, sadly. We closed below that level with a pretty horrible looking candle really overall, but we are trying to fight back today and trying to engulf the body of the candle that was posted yesterday. So we'll see if it's got the strength to do that. Again, stranger things have happened at the end of trading months, so maybe we'll see a bit of short covering on this, and we could see the potential for a bit of a reversal today on that. Is it a similar situation with the euro? Well, yeah, I guess it is. It bust through this support level at 106.36 earlier in the week, posted further losses yesterday, but trying to engulf all of those losses that we posted in yesterday's session. Already today up by 0.5% on euro USD. Just scrolling back to the left hand side to see if there's any levels here that catch our eye. Really, it's only this one, which is the lows from December 2016 that we're now looking for, and that level comes in at 103.40. So still looking for lower prices, I think, on euro versus the US dollar. Yes, we may see some short covering in the short term, but ultimately I think prices will continue to head lower unless we can see any kind of bottom formation take place. Looking at New Zealand dollar versus US dollar, this is another situation where we've broken below previous support at 65.29. We've taken out that low from the 28th of January. We have retested it already this morning, but still trading below it. So maybe scope for further downside there, but obviously that comes off the back of a pretty nasty run. So again, potential there for a bit of short covering in the very short term, but ultimately looking for lower prices. Finally, going to take a look on the FX side at dollar yen. We highlighted the 130 level because that's where the finance minister in Japan said they could potentially intervene. So that is a big level to watch. We smashed through that level yesterday quite convincingly, closing above it as well. We're still above it, although only slightly. A little bit of a correction going on as things stand today. But, you know, the longer this goes on, the more chance I think there is that the Japanese will intervene here and do something to try and strengthen their currency. So do keep watching that and be careful if you are exposed on the long side. I think is probably the risk at the moment. So moving on to the indices very quickly. We saw a bit of a correction yesterday in some of the US markets. Let's just take a quick look at the Dow. Overall, this is the daily chart. It still looks very choppy, as you can see here. Lots of sideways price action. Big green candle yesterday, but it needs to do a lot more before we get, you know, excited about that. I think in the short term. I think for me, this just looks like a big kind of topping phase potentially, and I think the risks are still on the downside with that. FTSE 100 looks to be underperforming today. It's actually in the red as things stand, still below this major resistance level at 76.78. A decent couple of days on the upside, but still got lots to do before we can maintain a bullish outlook on that. And obviously this is going to be linked to what happens with commodity prices and the dollar, because it is so heavily influenced by both of those. If we look at the NASDAQ quickly, that is the market in the US that continues to underperform. We saw a break below support here on the 26th of April, taking out that low at 12,947. Little bit of a correction going on at the minute. Seems to be running out of a little bit of steam. We'll see how much appetite there is at the end of a trading month and on a Friday to potentially push that higher today. But I think, again, risks remain on the downside, and we are looking for opportunities to sell into rallies on the NASDAQ for now. I'll leave it there because I feel like I've been talking for ages. So I'm going to hand it over to Jamie and Stephen Green, and you can run us through some stocks.
Cool. Thank you very much, Joe. Right, we'll start off with our biggest gainer and the biggest loser of the day yesterday. And to start with the biggest loser, we've actually got what, as far as I'm aware, a very popular stock, which is Teladoc Health. Came out with earnings yesterday, and perhaps again we'll look at the corporate calendar a bit later and break it down a bit further. But Teladoc, you can see it gapped severely low. I mean, 40% on the day, which for one of these bigger companies, I mean, it traded at, how many shares we got here? 87.44 million shares. So it's not like a small company by any means. And it's been really struggling since kind of the top end, back end of February 2021. We've had this quite severe, and that's not perfectly well drawn, had this kind of very clear downtrend. If I can actually draw it on. There we go. That's kind of the resistance and support of the downtrend, and then we had this huge gap lower yesterday on huge volume. So Not a happy time for TDOC holders. On a happier note, we'll go to RCMT, which is RCM Technologies. That gapped up on earnings. But I actually wanted to have a quick look at this on what, again, was quite a nice potential technical trade. If you were there and you saw it, we had this previous, what was a resistance, got touched once there, twice there, 3 times. I feel like I'm in an auction. And then it broke through and it came back and retested. So you had not only the breakout trade, you had the retest, which is like what we were talking about yesterday with, what was it, Cisco, where you had a similar kind of setup. But yeah, so that was, thinking back, happy day for RCMT holders, up 44% on the day. We'll jump into a couple more stocks. Firstly, we'll look at Amazon, which reported earnings yesterday. Amazon had kind of been, I mean, on a longer term, we'll bring it back to a weekly chart. It's been choppy and kind of horrible, to be honest, since kind of the back end of June 2020. In more recent times, we've had a bit of a smaller channel between this 2,700 area and kind of the highs of this 3,300. It was right at this support when it reported earnings yesterday. And if we drop down to after hours, we can see it actually did close below the key support level that it was posting. So it closed at 26,300, 26,000 numbers, 2,631, which you can see is about here. So it's quite significantly under where that support is. So it'll be interesting to see how it follows that up today, being the last trading day of both the week and the month. If the trading week ended yesterday, this is quite a nice candle, this kind of bullish hammer at support. But this is going to look completely different come today if we get a close under this support level. It'll be much more negative. So we'll see how that develops today. Jumping over to Facebook, which actually I missed this yesterday, but reported earnings and seemed to do quite well. I think I was a bit skeptical of this, seeing the price action coming into it, but it gapped up higher. I mean, what's that? It's about what are you thinking? 10, 20% move. It's quite a nice gap up. But what I'd quite like to see now is the follow through from this earnings. If we get a bit of a sell off in the next kind of week or so, I'm not going to be convinced that this is holding up. There was another example which I might be able to find of where when the earnings comes out and you initially get that good result which boosts the stock up, and then the follow through from that is negative. And I always think that's almost as bad a sign as if the stock had just sold off straight away, because there's no conviction in that move. But we'll see how Facebook Meta platforms, I should say, develops from here. Jumping over to Robinhood, and this had earnings yesterday too. I guess this is kind of what I was just talking about. We had this earnings, which actually did gap lower, but bought back up, kind of came back into support, bought back up, came back into support, and then yesterday we had an earnings just after the break of support, and it wasn't loved. I mean, again, it will be a case of seeing how this week ends on a lot of these, because this is a weekly chart for Robinhood. And if we do get a close kind of around where the wick is at the moment, which I think is where it's trading, about 894. So actually slightly lower than that. That's a very bearish looking candle, closing under all these previous wicks where there'll be a lot of stop losses waiting. So it'll be interesting to see where that goes from here. We'll do our daily Novavax checkup, and it still sucks. We're down to $44 now, ever approaching that level, which I thought, there I have it, do have it marked out, that $40 level. Even a day yesterday where the Nasdaq, I think, did rally a little bit. It closed up on the day. Novavax couldn't, which again, it's looking very, very sick. It can't really sustain any kind of rally. So again, since we've looked at this, and I think I've done this little test before, when I first looked at this support level, we're down 65%, and that's just in 2022. So it's really flown down at quite a rate, and it doesn't look to be stopping anytime soon. We'll run through a couple more quickly. Cineworld at support reacted quite nicely off that yesterday and has been bought up in the open today. Still in this downtrend though, and still in this descending triangle type pattern. So I'd like to see a break above this resistance level to kind of get a bit of a more bullish perspective on that. BNP, we got our favorite kind of head and shoulders type pattern here. I'm not gonna draw. I'm not good with the draw, but we've got the left shoulder, the head, and this right shoulder is also, it's not only a right shoulder, but it's also a descending triangle. So it's like a mixture of two patterns in one. But I'd certainly be interested in this when we get down to this 46, kind of 47 level. And a break below that, I think, would be very negative. I mean, where could we be targeting from there? There's a good chunk of room. We've got this previous swing low of 38. If we kind of drop a quick fib from COVID lows, that's not done. Let's have a look what we've got. So it's kind of already at this around this 50%. This 61.8 is kind of in that area too. So I think 61.8 would probably be a target if we broke through. Lastly, sorry, I've been going on for a little bit of a while today. Lastly, we will take a look at Rolls-Royce, and this is a head and shoulders pattern that I had drawn out previously. It looks like we've broken through and are beginning to retest now what would be resistance. So this looks like it have scope for a move lower. What I also quite like about this from a bearish perspective is that we do have the right shoulder, which is actually lower than the left, which I think, well, I believe is quite negative sentiment in terms of what it could be, where the shoulders are kind of a similar level. That's a bit more not as bearish in my eyes. But the fact that we do have this low right shoulder, I think, doesn't look good for Rolls-Royce and bulls of Rolls-Royce. So we will leave it there. Sorry, I've been talking for a little while, but yeah, some interesting looks on stocks and some earnings results that I think could really affect the longer term moves.
Cool. Lovely. Thank you, Jamie. Okay, come to the head trade. So each day, the three of us pick an idea live on the video and give it a shot and see what happens between now and the close. So each of these ideas must have a stop and a target. So there is risk management associated with everything that we do. All the ideas are placed at market and they're published directly to our TradingView profile. So if anybody's interested in monitoring those or having a look at how they've done previously, feel free to check that out. The ideas expire at 9 p.m. UK time, or when the stop or the target is hit, and we maintain a performance spreadsheet, as well as obviously timestamping those trades live on our TradingView profile. So this is where we're at. We've been doing it for a hell of a long time now, almost 600 episodes of this, all the catalogue of which is available on YouTube. So this is the overall performance. It's based on a hypothetical £1,000 account. We risk 1% of our trading capital per trade, so a maximum of 3% per day. As you can see here, when we first started doing this, we got off to an exceptional start before we then went into a period of a bit of a lull where markets were quite choppy and volatile pretty much throughout the course of the pandemic. But we now seem to be finding our feet again and steadily trending higher, which is obviously what we want to see. Overall, this is how we are faring. So win rates generally quite average, probably actually 45%, which is fairly typical for our style and our approach. So nothing wrong with that at all. And the collective R overall is more than satisfactory. That £1,000 account is well over 2,000 now, had you followed every single one of our trades. You might not be too happy with how things went yesterday. However, if you were following these ideas, we had 3 stop outs, sadly. Steve went short of Bitcoin, so there'll be a lot of people saying I told you so, I imagine, on that one, Steve. We went long of cable, which felt like a bit of a bottom pick, which was highly speculative and sadly didn't work out. And Jamie was buying Aussie Swiss, which also came a cropper, unfortunately. But we've got another attempt today to try and put that right, to try and put a smile on the face of these people watching these videos today, so they can come back over the bank holiday with a few extra quid in their pocket. Let's hope, anyway. So, who wants to go first?
I'll go first, I don't mind.
Go on then, Steve.
Okay, I'll put a smile on the face of all the Bitcoin users out there as they are working this weekend. We'll really sort of like looking at this channel, the daily channel here. It had a really nice reaction. There's 2 positive days, potential for going into the weekend with a 3rd positive day. The candles we've seen over the last 3-4 hours have been indecisive, but we've tested the lows and closed higher. So we're almost seeing like bullish hammers here, inverted hammer here, which can be seen as a positive candle, bit of a doji. So yeah, and the volume's sort of like sitting slightly above sort of like mediocre levels at the moment. So good positive candle this hour, 8 o'clock to 9 o'clock. So I'm going to go long of this and can have a nice little stop just below here. So quite aggressive on the stop. Let's see, and just give it 500 points. Is that enough of a stop in there? I suppose I could be a little bit tighter, but I want to sort of like target a reasonable level higher. I am going to be tighter on that to get some decent risk reward. I'm going to go for this 4-to-1 risk reward. So I am buying Bitcoin at 39,535, targeting a move to 40,735. My stop will be at 39,235. So it's only a 300-point stop. That's not a big stop in Bitcoin world, but risk reward looks okay on this.
Cool. Best of luck.
Thanks, Steve.
Okay, I am going to take a look at cable again. Glutton for punishment, and I think the key theme for me today is going to be short covering, because we've got the end of the trading month, we've got the end of the trading week, we've got a pretty savage move lower here on sterling against the US dollar. We've got 61.8%, which didn't hold yesterday, but maybe doing a bit of a job today. We're already trying to engulf all of those losses that we made yesterday. So I think, and it is just purely a short-term speculative trade on a short covering play, that we could maybe get some shorts exiting the market here to close off their books for the end of the trading month, which could result in a little bit of upside. So this is the daily chart. Let's zoom in to the intraday chart for a bit of finessing of the entry. This is the trade I did yesterday. As you can see, that was stopped out, sadly. So we'll remove that. Little bit more convincing today, maybe a bit more kind of rounding price action going on here, which is always what you want to see when you're trying to look for bottoms. We've got this key high here, which I think really needs to be taken out for things to get going on the upside with a bit more conviction. But I'm got a gun to my head, so I've got to buy it right now, and I'm getting in at 125.42. In terms of a target, we've got a 61.8% Fibonacci retracement level up here of this very short-term move, and that comes in at 128.30. Let's say that. And stop loss, I don't think it's going to look back from here, so I'm going to go quite tight on the stop at 124.89. It's going to give me 5.23 R if I am lucky enough for that to play out today. So that is my trade of the day. The theme very much here is looking for some short covering. Jamie, over to you, buddy.
Nice one, Joe. Thank you very much. I've been looking at platinum for the last 5 minutes and umming and ahhing whether to buy or sell it, honestly. It's at quite an important resistance level here. And I'll tell you why I've decided to go with the buy is that this resistance level we've had on this kind of 1 hour chart has been tested a few times, and it looks more vulnerable to me than the support level. It's just the main thing for me actually is this low we got here didn't quite get to the same level as the previous wicks, which suggests that maybe the buyers are starting to take control again. I'd prefer to buy a break of this level, but I've got a gun to my head, so I don't have that luxury. So we're going to look to buy this at current price, which is 9.28. And we're going to look for a measured move of this channel, which would be the distance between the support to the top. You extrapolate that out. So we're moving to about, let me draw it on properly, 961. We're going to have our stop loss at 920. And that gives us quite a nice 3.89 risk reward trade. It's a highly speculative one. Like I said, much rather see a break, but that's the aim of the game. So we'll hope for a move higher in platinum today.
Cool. Okay, there's 3 trades there. We will get them published straight away onto our TradingView account, so you can monitor those should you wish. Okay, data ahead for the day to pay attention to. We've got the US PCE prices index, which is due out at 1:30 UK time. So not really much on the calendar today to finish off the week and finish off the month. Next week, obviously, we move into a new trading month, and therefore we come with a raft of high impact data points that people need to be aware of, particularly from central banks. So we've got the Reserve Bank of Australia on the 3rd of May, we've got the Fed on the 4th, we've got the Bank of England on the 5th, then we've got non-farm payrolls on the 6th, as well as the Canadian employment report as well. So really quite a busy week next week on the macroeconomic side of things, as well as everything else that's going on, of course, in the world, which could influence financial markets. So, gentlemen, that concludes the week. Anything further to add before we wrap up for a extended weekend, a bank holiday weekend in the UK?
No. Oh, we've got 3 days off.
Yeah.
I was going to say, I just forgot about that as well. I'd love to see it.
Wow, brilliant. Okay,
Very
we'll
nice.
be nice and well rested by the time we come to May.
Let's hope so. Yeah. Okay, guys, have a fantastic weekend, and we will see you on Tuesday.
Cheers.
Thank
Bye-bye.
you.